Hey traders, it's Wilms. I wanted to come on here and show you my 10 o'clock trading strategy. So it's about 10:08 now. So let me mark up the charts and I'll show you exactly what I do. Hopefully we can find an opportunity to get into the market based on my trading strategy. So what I do is pretty much mark up the chart, starting with the 1 minute trading time frame. Go down to the 1 minute. I'm trading NAS right now, NAS 100. New York session started at 9:30, so this is the top 100 stocks inside of the New York Stock Exchange, and we're going to see if we can find an opportunity to get into the market and hopefully profit. I don't see anything. I'm not going to take a trade, so I'm going to show you my process and show you how that works. So hopefully you guys got a cup of coffee and you're watching this, and I appreciate that you're watching it. And let's jump right into it. So basically, in the 1 minute, I'm going to take my vertical line. We're going to start at 10 o'clock, and then we're going to mark up, go all the way to 11 a.m. And we're going to take our horizontal ray, horizontal line, take the top, this would be the top right here, before 10 o'clock, this would be the bottom, so the high and then the low, we mark both the high and low before 10 o'clock, and what we're looking for is a break of the high, break of the low, and if we find a break, we actually wait for the market to come back and retest a fair value gap before we jump into the market. So let's mark it up, show you what I mean. If the market breaks the high and comes back, it should be like a fair value gap somewhere in that break, so it'll touch the fair value gap and shoot down this way. This would be our target, which would be the low of the market. And the opposite is true. If the market breaks the low, comes back into it, should be a fair value gap within this area. We'll tap the fair value gap, and we'll take it to this high right here as a profit target. So those are the two patterns that I'm looking for, and we just gotta wait between 10 a.m. and 11 a.m. to see if that pattern will pan out. So now we just do a waiting game. We just wait for the market to do what it does, show its hand. Once it shows its hand, you can take action. But that's the trading plan strategy for the 10 o'clock session, 10 to 11. So let's just wait and see what we can get out of the market. And this is all the technical analysis aspect of trading, reading the charts, analyzing the candles, expecting a certain candle to develop within the chart, and once you see that pattern of candles expose itself on the chart, whether it's going up or down, you want to always go with the trend, of course. And if we look at the market right now, go to a higher time frame, say the 1 hour, the market is actually trending lower because it just broke this low right here. So we can go ahead and mark that as well, right there. the market broke below this low, so there's a market structure shift happening right there. So that's a sign that the market's changing and going and trading lower. So let's go back to the 1 minute, because it was trending upward, right? This was an upward trend at one point. If you start from the bottom, take it to the high, that was pretty much an uptrend, right? But once it broke this low, this previous low, we have a market structure shift. Okay, so I'm just waiting for the market to actually break this low here. Now that I know that the direction of the market is trending lower, but this strategy is pretty much like a reversal strategy. So if it breaks the low, it needs to come back up, right? If it breaks these highs over here and it shows a fair value gap, then I'll get into the market and try to, go this to this high here. This might take profit. But if it does the opposite, this will be going to take profit down here. So that line that I just created, this line right here, is based on the 1 hour time frame. So just mark that out. Just a reminder, let me know that the market did break the lows on the left and is trending lower. Okay, but we're looking to see if we can get into a reversal trade and see if the market would break the low here. Okay, remember, reading the Candlestick Bible will help you out with regards to understanding what these candles are. Because already I see a doji right there. Let me make it bigger. This doji is a reversal, that's why you see this yellow candle going up. Because it's trending lower here, and then it presented a doji candle, and then this candle's, if it closes as a bullish engulfing, it's trending a little bit higher. So it's 10:16. So typically this strategy only happens in a window of 10 a.m. and 11 a.m. Eastern Standard Time on the New York session. So you want to take advantage of this strategy once a day. Some days you have a winning trade. Some days you have a losing trade, because you're going to always set your stop loss and you're going to always set your take profit. Some days there'll be no trades, and you just got to be consistent, show up daily, and trade based on what you see in the market. Okay. Alright, so it's actually coming back up here. So I hit these lows here, so I can put another line here. Kind of like didn't break these lows down here. Okay, didn't break these lows because I'm looking for it to break this low here. Okay. And there's our indicator that tells you how to find or where the fair value gaps are. So if you go to this gear right here called indicators and you type in fair value gaps by Luxago, you'll be able to plot out where the fair value gaps are, and you can take a trade off the fair value gaps. But I'm waiting for a break of the low and then back into up here and it creating another fair value gap. I'm trading off the fair value gap, so let's just wait. There's nothing here yet. I wouldn't take a trade because it hasn't broke this red line down here. Okay. Remember, this blue line was a fair market structure shift line. Okay. So we're going to take off the fair value gaps until we get a break of this red line. And as you can see, if you look left here, you'll notice that the high here fell right into this fair value gap right here. So we can mark that as a fair value gap. And you can call this 1, 2, 3, 3 triple bottom. This wick hit that black line. This wick hit that black line. This wick hit that black. So it's a triple bottom right there. Usually when it's a triple bottom, it bounces off the triple bottom. It trends higher. We're just waiting. Now if it breaks these highs over here, if it breaks this high right here, and or this high right here, I'll be looking to look for a fair value gap down here. Now let's see if we can find a fair value gap. Okay, so here's a fair value gap. It already plotted a fair value gap for me right here. Okay, and what is a fair value gap? You're probably wondering. A fair value gap is a wick and a wick not touching the middle candle in the middle, creating that separation. So I make it bigger if you like. You see this wick right here, and this wick right here is not touching, but yet this middle candle is separating the two, which created that fair value gap. Okay. So that when this candle closes, what I'm waiting for is the candles to break one of these lines here. Right? Maybe fall into this fair value gap, come back down and touch that fair value gap, and trend higher. Let's see. Okay, so the fair value gap has disappeared because it broke through it itself. Okay, so it's 10:22. So trading pretty much is a patience game. You have to, learn patience. Patience is really important. Don't rush a trade. Don't get into a trade until certain parameters, certain confluences happen within the market, which will show its hand. The market will do the same exact thing every single day. The patterns will develop every single day. You have to be patient enough to, number one, identify the pattern. Number two, take advantage of entering the market based on what you see in the pattern. And then you set your take profit and you set your stop loss. That has a lot to do with money management, because you don't want to get into the market without setting those two parameters, because when you do, you're pretty much at the mercy of the market, because it could wick down and hit you with the stop loss and you just lost some money, but you didn't blow your account. But it can also wick up fast as well within about seconds, minutes, and then you can profit and walk away with a bag. So right now our pattern is developing, and I think I showed you that pattern in my last video, which is a down pattern and then this reversal pattern and this pattern here. If this pattern closes above the black pattern, I'm gonna get into the market, because that is the pattern that I like to trade, and I got 34 seconds to see if it will develop into that pattern, and then I'll go ahead and put a buy order in, and then we'll try to trade towards those highs. So we're gonna pretty much get in the market in 18 seconds, because this is a pattern that I like to trade. Okay, for a long pattern here. So the close of the market, close of that candle, I'm set that stop loss below this wick here, so right here, and let's get in. So we're in the market, executed a trade. We're up so far. Now we're going to set our stop loss and we're going to set our TP. Okay, so we take this tool. I like to use this tool. Set it right there. Grab this number. Put it as a stop loss. Confirm. Now we're going to set our TP. Take profit, which is going to be, I want to do a 1-to-1, but I could also aim higher, but I want to do like a 1-to-1. So let's see. This is a 1-to-1 would be right there. So that would be my take profit. We're going to mark that. Copy that number. Put it in there as a take profit. Okay, and now we just wait. Okay, so we got in on the pretty much close of that candle, on the open of the next candle. Okay, just develop another fair value gap right there, so we're in good shape, pretty much. It's actually didn't close below the fair value gap, but it touched the fair value gap. This is a small trade, it's not a big trade. We're floating $- right now. So I just want to show you number one, the pattern. Number two, a live trade. Number three, what to look for in the market. And number three, my trading strategy. So this pattern that developed right here, these three candles, is a pattern that I like to trade for buy. This, down candle, reversal candle, and this candle here. Okay, so I think I kind of made a mistake on this trade because this is not a bullish engulfing candle. Okay, I was supposed to close above that black candle, but this candle pushed up, so we'll see if it was a fake out. If it was a fake out, it'll go right into my stop loss and stop me out. Now, once you set your stop loss, some people have a bad habit of changing their stop loss, and because they don't want to lose any money. But never move or change your stop loss. Once you set your parameters, let the market do what it does. If it hits your stop loss, reevaluate, like I just did, and see where you went wrong, and then wait for another setup to happen. So let's see what happens, because my mistake was not seeing this candle. This candle right here was supposed to be bigger than this black candle right there. So I closed below it, so as you can see. Okay, so it's 10:30, so I'm just waiting for the market to... I'm still waiting for my second pattern. I'll probably place another trade if that pattern develops to circumvent the loss that may happen right here. The next pattern is for it to break this red line and go back up, create another fair value gap, come pull back, touch that fair value gap, and go higher. Okay, so I just been stopped out. I'm glad you guys were able to see that. Okay, so I just got stopped out. I think I lost like $1 or $2, whatever the case is, on that trade. My account size, this is a challenge. Account size is $10,050.15. So I didn't lose much, lost maybe like $2-3 on that trade. So okay, it actually broke this red line right here. Alright. And now I'm going to go ahead and erase this. Erase this. And now we wait for the next pattern that I'm going to trade. So this was a fake out, so be aware of fake outs. Okay, so I'm waiting for this candle to be bigger than this candle. I got 17 seconds for that to happen. So I'm waiting for any yellow candle to be bigger than this candle here. I want to see a break of that candle. Excuse me. So it's 10:34 now. We stopped trading at 11. Okay. We took a one trade. That was an L. We can place at least one or two more trades during the sessions. I normally like 3 trades. So we'll see. Alright, so we got closure below the red line. Now I'm waiting for it to pull back. Okay, so the market did create a fair value gap right there. Fair value gap right here. Let's see if I'm accurate. Yes, there's a fair value gap right there. Let's create another one that's right here. Okay, so now all I'm waiting for, if it happens within this hour, repeat this, pull that up. A break of this area here into this fair value gap, and then come back and touch one of these fair value gaps. So we'll put the lowest one. Okay. It's got to create another fair value gap when it goes back up, and then it does create one. We'll take the trade a line higher that way. Okay, so it's creating its reversal candle right there. Switch these markers out here. That's what I'm waiting on. Okay, so I can also bring this line down to this yellow candle right here. Yes, to this yellow candle here. It did break its own break of structure down here. So all this was support. I ran right through it. Now it's considered resistance. Take this line off. $10.39. And that's what I mean about patience. You gotta wait for these candles to actually show a pattern. Getting closer and closer to 10 o'clock. We stopped trading at 10 o'clock. And then I'm going to give comments with regards to the whole session. Okay. So stay tuned. Listen for my closing statements. So it goes up in the fair value gap, surpassed this area, broke this area, bring this down here. This is a yellow candle. It broke the yellow candle and higher. So I'm waiting for it now to break this. That's a serious bullshit of a candle because look, it's bigger than the candle before it. And there's your fair value gap right there. It's printed a new fair value gap. So all I wanted to do now is break this black line here, come back and touch this fair value gap and trade higher towards this area here. So we'll set it for it to pretty much go into this fair value gap. Let's see, what the ratio would that be? So we're waiting for this candle to close. This is the candle that's separating itself from this other candle. See, the wicks and the wicks are not touching. And you got a separator, which is this bullish candle right here. So this should close. And now we have a black candle coming back down to touch or fill the fair value gap. If it does that, we'll go ahead and take the trade. Some of you probably say, you should have got into the trade right there. No, you gotta wait for, confluences. You gotta wait for the pattern to develop before you take a trade. So I'm still waiting for it to go above this black line here. Which is this candle right here. Let's go above that black line. When that happens, even though it's above it now, when that happens, it's another market structure shift. So it's actually shifting above this candle over here. Okay, so we got a doji candle, which means it's a reversal candle. So let's start trading lower. See that? Now I'm waiting for the black candle to just tap in to the fair value gap. Either fill it completely or just tap it with its wick. And if it doesn't do that, it'll probably leave without us. So what I'm going to do is wait. Patience. Alright, patience. Okay, so we finally got a break of this line now. So now it needs to pull back into the fair value gap. That's what I'm waiting for. It may take off without me, so therefore there'll be no trade. But I want to buy low, sell high, right? That's the name of the game. So it just broke above the black line. And this is going to be a retracement right back into the fair value gap. And it did create a fair value gap right there as well. So get ready to place a trade. I'm waiting for this. I'm going to tap it and go back up higher. That's what I'm doing. So when you're reading the charts and you do it for a long period of time, weeks on end, you can draw what I just drew in anticipation, right? Because it happens every single day. So the more you see it, the more you can't not unsee it. So it just created a hammer, which is a bearish candle. Remember, this all has to happen between 10 a.m. and 11 a.m. Another hammer. So this little area right here that is staying within these parameters here is consolidating to the right. What did I say about consolidations? Do not get involved or place a trade when that happens. All this is considered consolidation. Okay, so consolidation, you always got to remember, is accumulation, manipulation, telling you that it's actually going down, and distribution. So accumulation, manipulation is trying to fake you out here, trying to tell you, okay, I've accumulated some orders, but I'm going to manipulate, right? And then I'm going to disperse distribution. So we're going to get into a trade right now. It's right in the middle of the fair value gap. So I'm going to place not one but two trades to see if I can recover from the previous loss. So that's my second trade, actually my third trade. The first trade was an L. The second and third trade, I'm going to set my stop loss and I'm going to set my TP. So let's pull out the long tool. So we got in right here, and we're going to set our stop loss below the most previous low over here, off of this right here. I'll give it some distance, so that way we'll let it do what it does, and then we're going to head for, erase this consolidation. Actually, let me leave that on there so you can see the distribution. Alright, so it tapped into the fair value gap, like I said. And now we're looking for a bounce off the fair value gap. And we're aiming for the highs over here. We're going to be aiming for the highs. We can aim for this fair value gap, or we can aim for this high right here. So let's see what that is. It's a 1 to 4.94, but I'm not gonna be that greedy. It'd be nice, right? Let's shoot for. We shoot for a 1 to 3. Or we could shoot for a 1 to 1. Let's see, 1 to 1. Close enough. So that would be like a 1 to 1 right there. Stop loss right below this area here. That's a 1 to 1. You can shoot for a 1 to 2 if you want. That's a 1 to 2. So let's shoot for a 1 to 2. Okay, that's a 1 to 2. Okay, so we're going to set our stop loss. We're going to grab this number below it, get the coordinates, copy that, put it for our stop loss on both orders. Confirm. You can see I'm already in profit, $1.55, $1.32. And I can cash out if I want, but I'm not going to do that yet. We may change our stop loss to break even. Let's see. Okay, now we get us at our TP for 1 to 2. I may keep a runner, I don't know. Let's see. Click on manually close out the second trade. So we'll set 1 TP on one of these trades. And we'll just let the other one run. I can always manually close it. See if it goes above my 1 to 2 ratio. But remember that there is a fair value gap up here. So maybe heading towards this fair value gap, bounce off this fair value gap, and go back down. So let's just see what happens. Mind you, it's 10:55. We finally got into a winning trade. A profitable trade. Well, let's see if it'll hold. So our parameters was met. I'm just waiting for distribution, which is above this box. We can take off my projection line. If it hits this line, it gives you to take the TP profit, $4.63. So I'm up $2.89 right now, $3. Mind you, this is just a conservative trade. This challenge, the profit goal is $700. Once I get to $700, I would have passed the challenge. I'm in phase 1 right now. The challenge is with Think Markets. I'll put the link in the description if you want to take a challenge with Think Markets. Okay, you can use my referral code. And yeah, remember it was $50. $3.50 is my balance. Now it's $53.80, $53.90, and trending higher. Okay, and we're looking for a 1 to 2 on this trade. So 1 to 2, pretty much, with one runner. Now, when you do that, I did instead of take profit for the second trade. When you do that, you gotta really keep your hand on the close button. That way, if it shoots below and towards your stop loss, you can close it out for a profit, or move your stop loss to the high of this area here where this line is, and you can lock in your profits. That way, if it does come down, at least you make some money. But if it goes up into this area, you made more money. So right now we're up $3.64. I'm using a conservative approach with this account. I usually do larger quantity size, lot sizes, but I'm not going to do that with this account. I'm going to take my time. My goal is to earn $50 a day minimum, but there'll be some days I'll probably make more than $50. So if I were to divide my profit target, which is 700, divide that by 50, 14 trades, 14 winning trades that hit $700. So I already got $50 in, so 13 winning trades a $50 per trade in profit, and I would pass the challenge. So that's the approach I'm taking with this. So I'm taking my time, not rushing the trades. I'm executing the trades based on what my strategy is, and I just shared with you the quick strategy, my trading strategy, and everything pretty much it hit my parameters, so I was able to place the trade. But remember, the market has no favoritism, so it may hit my stop loss again, it may not, but if it does hit the stop loss, that'd be 3 losing trades, and you just stop and reevaluate and come back the next day. Okay, so hopefully it doesn't hit the stop loss, and the 2 trades that I put in will be more than the trade I just lost. So that would be 2 wins, 1 loss, because you want to have more wins than losses going forward. So let's see what happens. Okay, so it is exactly 11 a.m. and we're stuck in this purple consolidation box. Remember, I said don't get into a consolidation, and look at what it did. It didn't break the high of the consolidated box, but maybe this candle will. So we're gonna stay in the trade and just let it do what it does. And this is where you just say to yourself, you can walk away, set it and forget it, come back to it, look at your history, your trade history, to see if it was a winning trade, to see if it was a losing trade. Okay, because trading is about probabilities. It's about analyzing the charts. It's about reading the candles. It's about seeing patterns develop, and that's when you would execute the trade. But it's also all about psychology, money management, and patience. I'm still in profit, $1.69, but we'll see. I don't know how long this consolidation will last, but pretty much I would stop trading right now, and I'm going to let this do what it does, and then I'm going to let the screen just record the session. And I'll be back. Another thing I wanted to just mention, once you place your trade, you don't have to sit behind the computer and keep your eye on the trade. You can close it down and go about your business, go about your day, and then, like I said, come back to the history of your account, whether it's a demo account or a live account or a funded trading account like this one. You can come back to the history to see if the trade either was a successful trade or if it was a losing trade. Because right now it's in consolidation. I don't know how long the consolidation is going to last. It's just going up and down, up and down, up and down. It hasn't decided what it's going to do. It's actually accumulating orders as we speak. So once it breaks out of consolidation, it'll pretty much go in that direction. Okay, so hopefully it breaks upward. If we look at the trade right now, I am profit $4.19, which means I can literally close out the trade if I wanted to and erase the loss that I just had, because the loss was about $3. But I'm not gonna do that. Let's let it, try to hit my stop loss. If it does hit the stop loss, not only would I erase the loss that I just had on the first trade, but I would have actually profited more on the second and third trade. There's your doji. Well, it's a doji right here. But then you have my 3 candle setup right here. Let's put that out. And the 3 candle setup right there, which is a bearish candle, a hammer, or a shooting star, however way you look at it, and then a bullish engulfing candle, which is higher than the previous candle. Okay. So whenever I see this, I like to get into the market because it tells me that it wants to trade higher. Okay, so I would have probably place another trade and put my stop loss below it, but 3 trades a day is good for the 10 to 11 session. You can place more trades, but you want to be disciplined enough to say I'm going to place 3 trades during the session and walk away with either 3 wins, 2 wins, 1 loss, 1 loss, 2 losses, 1 win, 3 losses. It all depends. So right now it's $4.19. So it broke out of the consolidated box. Alright, it's bouncing off of it, which is really nice. As long as it doesn't go back in the box. So what were some of the hints that the market's trending higher? Well, we had that doji, which is a reversal candle, right after the hammer. So this doji says, I'm canceling out the hammer, I'm going to trend higher. And then you have my pattern, my 3 candle pattern that happened right here. Black candle, this candle, this candle, which is a pattern that tells me that the market's going up, even though it got faked out on that previous loss. But this one is really nice because it's actually bullish. This candle is higher than the previous candle, which is good. Okay, so $5.30, $5.24 in profit. 2. Let's get to this line here. And this is what I said. I mean, I had said in a previous Facebook live post that your mortgage payment, your car payment, your electricity bill, your cell phone bill is all in the market. If you could learn how to trade, read the charts according to certain patterns, you can extract all that money out of the market and pay off your mortgage, pay off your car bill, pay off your cell phone bill, pay off your electricity bill. Okay. And that's exciting in itself. Okay. Where you, depending on your lot size, this is a small lot size. Like I told you, my strategy is $50 a day. But imagine if I had put a large size or quantity fill for the trade. I could put a couple of zeros, but be behind the $6. It could be $60 in profit, $600 in profit, $6,000 in profit, $600,000 in profit, $60,000 in profit, depending on your lot size, depending on your risk tolerance, depending on your strategy. Okay, so you want to start small, of course, and scale up and put higher orders in over time. Because if you try to place a huge order, a huge lot size, a huge quantity, these are quantities here, and it goes against you, boom, blow the account, you didn't manage your money accordingly, and you made a bad decision. This is not gambling. This is, strategically done with a trading plan. Okay, because like I said, this stuff happens every single day. And if you can get into the market when it happens, you can have a winning trade. Okay, so I'm up $6.39. What I'm going to do right here, since I went above this consolidated box, I'm going to move my stop loss. Okay, I'm going to move my stop loss to above the box to secure some profits. Okay, so right there, right above these candles here, grab this number, and place it underneath both trades. So what I'm doing is changing the stop loss to this number. Okay, so I'm eliminating the downside risk. So if it comes back and hits that line, I'll walk away with some profit. Okay, but I'm still in the market. Okay, this is how you secure the bag. I'm still in the market. If it comes back down to that line, I would have made $2.48. So that's a profitable trade. So there were 2 winning trades, 1 losing trade. Okay. I didn't do the math, so I could still move my stop loss to go underneath the $4. That way, I would have erased the previous loss. Okay, but I'm waiting for it to hit my TP. And once it hit my TP, it's a winning trade, and hey, I'll walk away with a higher bag. More money in the bag, baby. Alright, and this is what you're going to learn. Not only by joining the academy, you're going to learn these strategies. And I'm going to teach you these strategies. So, it'll behoove you to become a student of the academy. Invest in yourself. For 2026, give yourself a gift of knowledge. Get into this. Get in, stay active, be engaged, attend the seminars, the webinars, the Zoom trainings, okay? And let's have some fun doing it, okay? Let's have some fun doing it. So we have another reversal candle here. Don't like the way that looks. So, but we're gonna still stay in the trade. There's your doji candle, which is a reversal candle. I don't like the way that looks. So, that's a reversal candle. I may move my stop loss. Maybe bring it higher. Right here. Underneath this candle. If it reverses, at least I will have walked away with some money here. So let's go ahead and do that. And then we call this a trailing stop loss, okay? Because now that the market is giving me a hint that it wants to reverse with this doji candle, I can go ahead and move my stop losses underneath the winning trades. Okay, so there you go. TP hit on that one. Let's close this one out as well. Alright, so both trades were winning trades. I thought I put a TP on that second trade as well. Most of a race, I don't know what happened. But both trades were winning trades, which brought my account from $50 to $59.27. So 2 wins, 1 loss. Not too bad, okay? And I'm going to continue to trade throughout the day to see if I find other opportunities. 2 o'clock to 3 o'clock is another time you can actually try this strategy. And then from 3 o'clock to 4 o'clock, that's another hour window, makes it 2 hours. You can take a look to see if the trade, I can find the same trading setup within those time frames. But I want to thank you so much for watching. You just watched me trade live here on my YouTube channel. This happened today, December the 22nd, 2025. I'm going to come back on here tomorrow and do the same exact thing. I may or may not upload the video, but we'll see, because it's 2 days before Christmas, and I don't know if I'll take the day off, do some last minute Christmas shopping. I have to do some last minute Christmas shopping tonight, so I'm gonna go out into the mall, wish me luck, and come back out here tomorrow. But thanks for watching. Don't forget to subscribe to the channel. Don't forget to share this information with your friends. Give it a thumbs up. Also, when you subscribe, you'll get notification that future videos are here for you to watch as well. So with that being said, you guys are winners. You guys will be successful if you just implement the strategies that I teach. And let's have some fun doing it. Thanks for watching. Have a great day. Bye for now.